Hello everyone, what's up? And we got a pretty eventful day in the market. We have stocks crashing everywhere. Everywhere we look, we see just stocks just going down and down in price. It's definitely been a fun day, and I'm a little excited for this because I've been waiting for a bit of a market pullback. There's been some stocks that I've been kind of looking at and just been wanting to get into, but that valuation is just too high. So if you're thinking long term, you should be thanking this because you're just getting any of those great companies you want to own for much cheaper valuations. So today in this video we're going to go ahead and go over kind of this heat map right here and just kind of going through the stock market in general on the day. After that, I want to go through three different earnings. We're just going to kind of touch base on them and I'm going to give my thoughts on some of them. So right now I have the Meta earnings over here. I have the Amazon and then I have the PayPal. So we can go ahead and get started. So the day, if we look at the Nasdaq, I believe it was down about, I want to say almost 2% on the day. So if we just go over here and pull that up, we can see, yeah, stock market down 1.6% for the S&P, Nasdaq down over 2%, Russell down 2%. And you can see where everything's pretty much getting hit, a lot of big techs getting hit. You can see we have some safety or people head into safety over in kind of the retail plays, Walmart, the Home Depots. So what actually happened? Just job reports and tariffs. That's the main thing. And the the jobs report came in, data wasn't too good. On top of that, I think it was yesterday night Trump announced some new tariffs going into place. So the market's factoring that in, crashes everything, which is kind of funny because some of these stocks, the earnings have been actually pretty good, which we'll get into in a second. But for example, Meta, I think the day before was up double digit percents, over 11%, I want to say, and then it had a pullback today. Amazon had some pretty decent earnings. You can see today it got hit pretty hard, negative 8%. There's a reason that that one got hit as well, but that combined with the market dynamic just selling off everything today is just pulled it down even more. 8%. That's insane. But before we get moving on to the next section, I just want to say that if you're newer to investing, these are the times we're gonna make the most. Or I won't say these are the times because honestly, it's one day. It's one day down. But point being, whenever the market starts having those pullbacks over time, this is when you're going to make the most money coming out of it. Me myself, my portfolio's always grown the most out coming out of a bear market or a market downturn, and that's how it always works consistently. Every time my portfolio has a pullback in one of these, as long as you're in good companies, good consistent companies at reasonable valuations, your portfolio is going to rocket to new all-time highs whenever that next bull market comes, and you're going to spring past your past lows. You just got to make sure you understand the companies you own, and you run some projections on it, and make sure you're paying a reasonable valuation. Because even if there's a market downturn, if you're still paying some crazy price like 30, 40 price to earnings, you could still end up screwing yourself. Because even if the company does well, if they're still overvalued, you're not going to make money. You got to tie in that valuation with the growth. You got to tie in that valuation with everything. Anyways, so we got that out of the way, so we kind of know why the market's down. Now, first, I want to get into Meta. Full disclosure, this is a stock I do hold. I've held this one actually for a couple of years. Right now, my cost basis is down at around the 150 range, I want to say. And this is one of those companies where I just really love the business model. They've executed so much that I legitimately think I'll probably hold these shares till the day I die. This is one of those companies where I don't feel need to ever have to cash out of any shares. If I find other opportunities, I'd rather put new money in or close out some other positions. This position, just one of those companies, extremely well run business, extremely good business model. And yeah, so I'm just going to keep holding those. Anyways, down for the day, down 3%. But like I said, it was already up about 11% yesterday. So really, still up in the week. And you can see, yeah, after they release their earnings, huge jump. Which, if we go over here, you can just kind of see just from this overview over on their press release, they grew revenues by 22%. And then the bottom line, the net income was 36%, which is insane. And that EPS up 38% because of the share buybacks they've been doing. And something of note that I kind of looked here is it's still insane to me that they're still growing 6% or around that 5-6% range on their daily active people when they have this many people on their services, because that's almost half the world's population. I'm pretty sure the world's population is it actually approaching 8 billion? I may be way off on that. But either way, I think it's 7 or 8. Let's go ahead and, you know what? Let's go ahead and check real quick. World's population. Oh, it is 8 billion. Yeah, okay. So 8 billion people, a little over 8 billion people, and almost 3.5 billion are on one of their services. That's hard to believe, to think something has that big a reach. It's insane. So if you look over here, so not only are they increasing on that, they're increasing on their price per ads and their ad impressions. So they're showing more ads and they're charging more for those ads, which is obviously causing their revenue to spike up so much. Now, there's not much I really have to say on Meta. I mean, it's just I love the business model. All the metrics are looking great. There's a reason the stock was up 11% a day, and honestly, it should probably be going up higher. But yeah, just they're shooting on all cylinders. And one thing I do want to also point out with Meta, let's see if actually in here they show it. This is more of something for the long term, but Reality Labs currently is consistently being a net loser of about $4.5 billion, and they could cut this segment today, and then that's instantly another $4.5 billion they'd just add to the bottom line just from cutting that. Now, realistically, they aren't going to cut it. I don't believe Zuckerberg ever would, and honestly, I don't think he should because they have enough money coming in from the actual family of apps side of the business that they can support this growth development, and I kind of trust them enough to think that this development of the Reality Lab side is eventually going to return an actual return for the shareholders. I don't think it will be for like another 10 years or so, but imagine, so just going to break even, that's already going to be 4.5 billion about they're adding to the bottom line just from it not being a subtractor. Imagine if this segment were to long term grow to a 5, 10, $15 billion more to the net income on top of their family of apps. And I don't see that as completely unrealistic. I'm seeing how the Meta Ray Bans and all their glasses are taking off. And even myself, I looked in them. I use the Meta Quest 3 a lot personally, and it's I like to use it for either watching videos or I'll sometimes play some VR games, but really just watching videos. And I'm just thinking if they can get that form factor down to the glasses, but get more of that actual tech part in the glasses, that AR side, that can be a huge opportunity where it becomes like another consistent wearable in the future where majority people you're just going to have it because this is what the norm is. And that's not even thinking of what if they can get the form factor down on those glasses and you can still have your screen projecting. So that's my whole thought process. Like, what if instead of having to go out and buy a TV, or you could still have your TVs, but if you don't have a TV, you can have the screen project from your glasses and you're able to see it. It looks widescreen. Nobody else sees it. I think it could be cool. And honestly, with the rate they're moving on the tech, I think that could be a reasonable possibility in the future. This isn't even mentioning all the AI spin they've been doing that's actually been showing reasonable return to the company in terms of the actual ad impressions and the amount they're able to charge for ad just because it's showing more relevant ads. And even myself, I've noticed just on Instagram Reels, the algorithms gotten substantially better. And I just think as they improve that algorithm, it's just gonna make the product more sticky and make more people come back to it over time and want to use their products. So Meta, real happy with those earnings. Glad I still haven't sold any of my shares and do not think I will anytime in the foreseeable future. Coming up next, Amazon. All right, so with Amazon right here, this one actually did not have the same story as Meta. As soon as these earnings released, stock tanked. And if we go over here, and it dropped even more today, as we saw 8%. But even before that, if we look the day before, they pretty much released earnings, and then the stock just went into free fall. Let's see if I can find. I believe it was on Thursday after the bell. So yeah, into after hours if I remember correctly. Just down, down, down. And we can just see that just carried into today. And so with Amazon, you're probably thinking the earnings were horrible, must have been terrible. Honestly, no, it wasn't as strong a quarter as Meta reported, but they still increased their net sales by 13%. And they still had operating income increase. Everything was increasing. Operating cash flow increased 12%. Free cash flow decreased, but honestly, with Amazon, this is a metric I don't really look at just because they spend so heavy on capex. But if you're looking, they still are increasing on everything. So the main thing the market was looking at was just its AWS segment because it only increased 17.5, which sounds ridiculous, only 17.5%. Most other companies aren't growing their segment 17.5%, especially not whenever it's $30 billion of revenue. But yes, it only increased 17.5% versus Microsoft Azure, which I believe was at 37%, 34%. Yeah. And the market's kind of looking at that, and they are just kind of pricing in saying, okay, it looks like Microsoft is winning on this front and they're starting to take market share and it's starting to worry about the growth on the AWS side of the business. However, so I do understand the concern there. However, you do gotta also take into account that there is a thing, the law of large numbers, and AWS is a larger total amount than Microsoft is. So if we jump over here real quick to Microsoft's report, we can see it. Where did I see it? Here we go. Azure surpassed $75 billion in revenue, up 34%, driven by growth across all workloads. So 75 billion, this is for their fiscal year. So if you look for Amazon right here for their AWS segment in the trailing 12 months, they've done 116 billion. So they're still ahead, but I do understand why there's concern because this could start pulling back. But at the end of the day, I think 17.5% growth is still really good growth. That's going to continue for years on to go in the future. And just Amazon in general just has so many business segments that they're going to pull from for growth. I think I think honestly it will be fine. Sorry, here we go. Segment. Okay. Yeah. So just looking over here, I'm just thinking long term on this. AWS is still showing growth, which is what I want to see. So that's fine. And they are still barely making any net income or any income from this international part of the business, and I think North America still has way further to grow on margins. So honestly, if I'm looking at this from a long-term, like 5-year perspective, I don't I don't think it's anything but a blip in the radar. If I'm being 100% honest, and yeah, we can just keep going from there. So that's Amazon. Then last one, PayPal, and then this one, same thing. big dip. As you can see, kind of a trend. The only one that actually had anything going decent was Meta. But yeah, 2.4% down on the day. Oh, I always hate using the charts on Yahoo Finance. Either way, down 2.4%. And this one again, you're probably thinking, okay, probably terrible earnings, something to be down this much, and it dropped more the day before. Which if I go on over here, just because it's easier to chart, do some of the charting stuff. Yeah, if you look 72 down about 14% from what it started off in the week. And you're probably thinking, okay, the earnings must be horrible. And if you look at the company, it's not really richly valued. It's trading at a 14. That's that's a little below market average. And even if you look on a forward price earnings basis, 12, which is extremely low, right? But if you go into the earnings, you'll see that they had respectable earnings. Their net income is increasing, the transaction margin is increasing, operating income as well, and then something else to note is just if you look at their actual share count, which where's the share count? Here we go. If you look at their share count, they've been buying back shares so heavy that they are like rapidly reducing the float. And if you look, so back in 2024, that was about 1.47 and then down to 977 million, which is kind of that's a lot. That's a lot to reduce the share count by, and especially I really like that they're doing the share count while the stock is so cheap. And yep, yeah, you just got to remember when companies do this and they're buying back shares like that without you buying any more shares, they are just reducing they're increasing your ownership. They're reducing the share count, which makes you a higher proportionate owner, which pushes the earnings per share, which long term pushes up the stock price. Just it just for anybody who is wondering why that is important or is unsure. So then you're probably asking, okay, the numbers all look pretty decent. They had good numbers across the board. What was the problem besides just the actual market downturn? One thing. One thing that people were grabbing on headlines that is a reason the stock kind of dumped. This sign right here. Payment transactions decreased 5% to 6.2 billion, excluding payment service provider transactions. Payment transactions increased 6%. Okay. This is what people are looking at. So they're thinking, okay, oh, PayPal, like they have less payment transactions, people must be using it less. The company long term is going to be dead. That's a bad trend. And then a lot of these, I definitely saw there's some articles posted about this metric, and a lot of these trading algorithms. There's a lot of algorithmic trading that goes on that just kind of reads headlines and goes through the portfolio and will sell or buy. And that's what I'm assuming happened on here. But if you look deeper, I don't think this is an issue for one reason. Check the footnote, guys. So, 4. Payment transactions X PSP and TPA exclude unbranded card processing transaction and accounts. Now, if you okay, so if you don't know anything about the company and this is the first earnings release you looked at or anything about the company, then I could understand why that would seem concerning. But for anybody who's actually gone through and listened to the past like 4 or ish so earnings calls with Alex Chris, he's been describing this being his strategy for about a year straight now. Pretty much since he took over in the CEO position, where his focus was to shift the company over to profitable growth. To do that, a lot of the unbranded Braintree revenue he was trying to cut out because it's lower margin. And in doing this cutting out, he's lowering the payment transaction volume, but the reason he's doing this is so we can bring back in more of the branded revenue long term that's going to be higher margin and be a higher contribution to the business. That's all it is. And if anything, it's good that this happens in the market where they still misjudge things because it makes opportunities for us as long-term investors. So, yeah, that's pretty much my thoughts on that. So, I'm so I'm so fine with PayPal. I think everything else was good. I listened to the conference call on that one. Everything sounded fine. So far, going through these three earnings have been pretty decent. Do I expect the market to continue this pullback heading into Monday? That is actually, I wouldn't be surprised if the market's also down Monday and maybe just has some pullback has a couple of weeks. And the reason I say so is there's a good quote by Peter Lynch, where if you have ever listened to Peter Lynch, he hates macroeconomics. It's the funniest thing. He has one joke where he's basically like, if you spend 13 minutes a year on macroeconomics, you wasted 10 minutes of time. But in one of his books, I can't remember the specific one it was from, but he goes through a thing where he's saying over the weekend, or it might have been his interview. It's probably the interview. Anyways, over the weekend, people will become economists, and a lot of the times, if you look on average, the lowest days in the market or the most declining days happen on a Monday. And his reasoning is because everyone becomes a macroeconomics expert on the weekend, and so they come Monday and now they've analyzed all the charts, blah blah blah, whatever. They've overthought things, and then sell off happens Monday, which I could completely see happening. Now, am I going to bank on that? No, but I'm going to keep watching and I'm going to keep looking at good, respectable, high value companies, or not high valuation, but really good companies that are trading at attractive valuations, and I'm going to continue to add them to my portfolio just like I've always done. And whether these companies continue to downtrend for the next 6 months, for a year straight, and it just goes down, I'm just going to consistently keep adding my position and adding my position over time. And just for anyone who stayed here that's newer into the market, you just got to have a long-term time horizon and just remember to just DCA. If as long as you understand the company, you ran your projections, you have your valuations, DCA, you'll be fine majority of the time. And you are always going to make the most money, like I said, coming out of when you have these downturns. It's just how it works every single time. But with that being said, I don't think I really have anything more I can add here. If there's anything y'all would like me to talk about, whether it's any subject, from if you want me to look through a company's earnings and just give my opinions on it, or if you want me to maybe go over explaining like maybe some valuation metrics or anything like that, anything similar, anything happening in the market, please just let me know and I'll be sure to put it on my list.